Yeah, I need to trust a plan right here because I got all of these conflicting indicators. You know, the market's up, bonds are good, but other people are doom and gloom over here. You know, tall cotton over here. I don't know, Nick. Help me out here. What's going on?
Well, it's part of the healthy debate, but you're always going to have, the market trying to climb this wall of worry. There's always going to be recession fears, but the recession fears over the past year, they just have not come through to fruition. The market has had a great rebound year after last year. In fact, we're sitting on all-time highs, I should say calendar year highs for 2023, but we're still below the all-time highs of December 21.
So, if you're an optimist, there's still room to grow. If you're a pessimist, you can run because the bond markets is where people often go to protect themselves, right? Both look pretty good. I mean, as of the most recent market looks, right?
Yeah, that's right. And I'm glad you brought up fixed income because a lot of our investors, particularly those who are thinking about retirement or already retired, they might find themselves with a balanced risk portfolio. And the fixed income could be a third or up to a half of that portfolio. And so forward-looking returns of 5 and 6% in fixed income is huge. And we look at the historical returns for stocks, and while it's certainly not linear and we don't know exactly what the path will look like, the history suggests 8%. So a balanced portfolio is looking pretty good right now.
All right, so stocks, bonds, gold, all doing pretty well. You could have put your money in any one of those three places 6 months ago and be happy about how things turned out over the last 6 months, right? We're still not back to the all-time highs. But, okay, so let me ask you about something else that often is in the headlines, and I don't think people have a lot of understanding. The Fed raised the rate, lowered the rate. I mean, they understand how it affects the interest rate on a mortgage or the interest rate on a used car or even, on their credit cards if they have a balance carried over. But what's going to happen next, and what does it mean? Is the dollar in good shape, bad shape, and what does that mean? That's just a bit of education here, Nick, for all of us.
Sure. So the Fed governors and the Fed voters are threatening that they could still raise rates next year. But the market participants are suggesting that's not the case, and they're pushing back, predicting 4 rate cuts for next year beginning in May. And so that's really two different stories, okay? And so when I think about, people calling for a recession, right, they're looking at the fact that interest rates are high and that the Fed is going to break something. But if the Fed has to cut, right, that's usually supportive for markets. It would be bullish for stocks and bonds. It would be bearish for the dollar, to answer your question. And when we have a falling U.S. dollar, it's wonderful for our international investments, our emerging markets, as well as our commodities.